Hello, everyone, and welcome to our Lending Tech session. I am Peter Rubenstein, Director of Technology and Innovation at Inclusiv. And before we dive in, let's take care of some brief housekeeping up front. So I would kindly ask that you keep your camera on during the session. And to minimize any background noise, we kindly ask that you remain on mute until our audience Q&A. Please do use the chat box to drop in comments and ask questions throughout the entire session. And if you have any technical difficulties, please email emsupport@advancednetlabs.org, or you can click on the support bubble on the bottom right-hand side of your screen. If you're on social media, the hashtag we'll be using, and we've used throughout the conference, is hashtag CDCUCon2021 to keep discussions going. And of course, follow us on Facebook and Twitter at Inclusiv CDCUs and LinkedIn at Inclusiv. And finally, after the conference, videos of all the sessions will be available on Inclusiv's YouTube by October 11th. Okay, we've got that out of the way. It is now my great pleasure to introduce our speakers. You can find their bios at inclusiv.org or by going to the front page of the conference website. But very briefly, here they are. We're joined by Bob Carlson, Senior VP of IT at Hope Credit Union, Mike Salfity, Chief Product Strategist at Finastra, and Aissatou Berry-Fall, CEO of Lower East Side People's Federal Credit Union. Before we dive in, let's set the stage for our discussion with some framing. Much has been written and said about the impact the coronavirus pandemic has had on almost every part of our daily lives. But for as much disruption and loss that has been caused by the virus, we've also witnessed resilience in often astounding ways. Friends, neighbors, communities have come together to help each other get through the darkest of times so that together we reach the light at the end of this very long tunnel. Joining us in the fight were companies like Bacardi, Hanes, and GM that were able to quickly retool their factories and product lines to produce face masks, hand sanitizer, and PPE for frontline medical staff. Private companies, in partnership with their employees, got creative with how they joined the worldwide effort to fight the spread of the virus. Even retail giant Nordstrom, the country's largest employer of tailors, offered new training to their tailoring teams so that they could produce hundreds of thousands of face masks that were distributed to frontline healthcare workers. Now, creative and ingenuity are some of the defining characteristics of community development credit unions. During the pandemic lockdown, many CDCUs worked night and day to equip staff to work from home and to adapt their products and services to meet the needs of the new virtual world. Many credit unions added new online and mobile features, such as remote deposit capture and remote account opening, along with tools that allowed members to go through every step of the lending process online. With the passage of the CARES Act that resulted in the creation of the SBA's Payroll Protection Program, credit unions, even those without any SBA loan experience, mobilized to disperse funds that would support the nation's workforce during a sudden and massive economic decline. CDCUs, as they always do, answered this urgent call, lending nearly $2 billion through PPP to businesses in their communities in 2020, and even more in 2021. As Maxine Waters said in her remarks in our opening session, your work did not go unnoticed. For many CDCUs, the ability to process so many business loans so quickly required more than a little ingenuity, innovation, and investment. It often required new technology to allow them to vastly expand their lending operations to keep millions of families financially afloat. In our session today, we will discuss how community development credit unions and FinTechs met the lending challenges of the pandemic and what lies ahead. But before we dive into questions for our panel, we have a few questions for you. So please take a moment to answer our poll questions that will help us all get a better understanding of the technology your credit unions have implemented in the past 1.5 years and the lending tech changes that your credit union is considering in the future. We'll give everyone a few more seconds for that first one, then we'll go to the second question.
We've got about 50% of people responding. We'll give it just a few more minutes. Seconds rather, not minutes.
Great, please do put your answers into the poll. Great, some very interesting responses. Of course, online loan origination systems leading that pack, of course, and that's what we're here to talk about, along with online mobile banking platform, which makes an abundance of sense. So let's go ahead with that second question. Looking at what plans you have, or if you're planning to add new lending tech in the next 12 months. And we'll keep this open for another 30 seconds or so. Okay, I'm hoping everyone has gotten their questions in, or their answers in, and then, great, yes, as expected, a great many of you are looking to do some new lending tech in the next 12 months. So I really appreciate you going ahead and giving us your answers there. And now we will dive in with the questions. So the first question is for Aissatou and Bob. The first part of the pandemic shined a spotlight on the critical need for many credit unions to up their technology game, to meet their members' needs in this world that is now completely dominated by digital engagement. How did Lower East Side Peoples and Hope respond to this need? Aissatou, if you can go first.
Thank you so much, Peter. First, I'm going to introduce myself quickly. My name is Aissatou CEO of the Lower East Side People Federal Credit Union. I have been with the credit union for 30 years, and this is I've been there for 30 years. This is not really our first disaster like I experienced. Like, this is the third disaster that I kind of witnessed and had to deal with while working at the credit union. That being said, disaster is not new to us at the Lower East Side People Federal Credit Union. We did what was done in 2001 during the aftermath of the 9/11. We did what was done during 2008 during the financial crisis. All like end up by like the main goal was servicing our members and just make sure they get what they need in the daily basis. It was really not an easy task managing the safety of our employee with the pandemic. The pandemic was kind of like different with those other two disasters that we went through. It was not easy, like making sure like our members' safety is like a priority and our staff safety is priority while implementing all these new online platforms and continuing to provide the support to our member and our businesses. While banks were closing their location at the Lower East Side and other part of the city, we opened our East Harlem branch location. We upgraded all our ATM machines And we implemented online loan application to allow people to be able to apply even if the branches were closed. We kind of like introduced like a DocuSign to implement e-signature for electronic membership and loan application. We like implemented the remote deposit capture. Those are like a few of the things that we did during the pandemic to kind of respond to the disaster. Thank you.
That's really wonderful. Quite a lot going on during a really tough time. Bob, the same question.
Yeah, sure. Hey, I'm Bob Carlson. I've been with Hope about 14 and a half years now. So I actually came to Hope at the kind of start of when Hope was working with Hurricane Katrina relief. So we had a lot of, boots on the ground, people actually physically going out and talking to people. And through the pandemic, we tried to mirror that as best we could, even though we physically couldn't go out and talk to people. In the span of a week, we sent half the company home. We kept our branches open through drive-through only, made sure that people could make appointments. For us, it wasn't so much, actually new tech that we launched, even though we made enhancements to our online lending. We made enhancements to online banking. I heard a story a few months ago that in the first few months of the pandemic, we actually deployed more debit and ATM cards than we had in the previous couple of years, just because members weren't able to physically come in and do their normal cash transactions like they were used to. So for us, it was, enhancing our online applications with some updates that we had in the works for a bit. So we just accelerated a lot of plans that we had. Online applications were opened up. We deployed video calls for everybody. Everybody got video calls, and we actually trained all 200, and I think it was 207 at that point, employees on how to use DocuSign, how to use WebEx, how to connect into VPN, how to use remote access. And it was 200, for us, it was 200 plus employees that we trained in the span of a week. It really was we showed up on Tuesday one day and the CEO said, that's it, we're watching it, send everybody home, they can go home. And my team kind of sat back for about a half hour and said, okay, we have the tools we've been working for, let's just accelerate the deployment and get them out. So it wasn't so much that we had actual new stuff that we looked at deploying, even though we did have some enhancements in online. We launched an online application for PPP lending, which was new for us because we launched it in the span of about a month instead of spending the traditional 6 months or so to figure it out. So for us, the pivot wasn't as much of a let's find this new thing, let's launch this new thing. It was, hey everybody, all these technologies and tools we've been working on the last couple of years, unfortunately, you now get to use them in 24 hours. So training and IT came together really well for, how do you do this? My team, we used to log calls and we decided not to that week because it was, I think collectively we all worked about 60 hours plus that first week just on talking to end users. Here's how to connect the VPN, talking to end users, here's how to log into this DocuSign system. So we spent a lot of time on the phone. And then we made sure that our staff could mirror that in talking to our members, our borrowers. I got a question at one point of, who should we think about for launching this new product? And I said, think about your barber, think about the grocery store you drive by when you go to school. Think about all the small businesses in our footprint that may or may not need our service that you've never talked to. Let's make it a touch point.
That's really great, Bob. Clearly it seems that being prepared is something that was really vital for both Aissatou and your credit union and Bob, of course, at Hope. Aissatou having been through a number of crises in the years before the pandemic. I'll shift over to Mike and Finastra. So Finastra is a provider of world-class technology that, among other things, allows financial institutions to bring the entire lending process online. I'm interested to know a couple of things. One, about Finastra's commitment to serving financial institutions that are serving the LMI communities, low-income communities, communities of color, and of course, more about Finastra's response specifically to the pandemic.
Sure. Thanks, Peter. Great to be here. Just a brief intro. I've been at Finastra 3.5 years. I came in initially to as a consultant, and I actually still am a consultant, but I've been here 3.5 years. Came in to help them with business transformation and looking at new products and so forth. When the pandemic started, well, first of all, Finastra is the 3rd largest fintechs in the world, and we are the largest pure software play fintech. All we do is deliver software. We've got 9,000 clients global, and within the United States, we have about 4,000 community banks within our North America community markets clientele. I run product strategy for the company. I also stepped in right about that time to run the North America community markets, which provides all the lending software and all the core software for the regional banks. When the pandemic hit, we realized that the world has just quickly changed. And when the first PPP window opened up, within about 3 days, we released a software package to help our client base with being able to offer lending remotely. So things we had to do that we hadn't really accelerated in the roadmap were things like e-signature, e-notary, remote application submission. We had to get a web application out to them. And we quickly realized that while we were doing this, the underserved community was still struggling with getting the software and loading the software. So as we were doing that, actually Robert, who is the founder of Vista, and Vista owns Finastra, Robert's office called me, set up a call with Robert, and Robert said, how are we doing with facilitating PPP loans? And I gave him all the stats, and we have facilitated over 100,000 loans. And I said, and he said, where is the money going? Is it going to the underserved? And the answer, unfortunately, as you know, was no, it wasn't. And Robert said, why? Why isn't it going there? What, can you help us understand? And what we did was we actually did a lot of research. I got a list of institutions from Robert, who at that time got it from Mnuchin's office. And we literally called and emailed 500 institutions asking them questions about, are they participating? Why aren't they participating? And what we found out, much to our disappointment, is that although the capital was there to loan, that their lending software and their processes were not able to ingest the loans and process the loans and submit the loans. And you couldn't get that flow through. And we were then chartered to go figure out how to fix that. And the two problems that we found and learned is that many of the smaller financial institutions and CDFIs and underserved markets had no IT support. So even if we gave them the lending software, downloading it, putting it on a server, getting it running, all of that was cumbersome. And specifically, since they had no one coming into the location to do it. So we actually took the action to figure out how are we going to solve the barrier of no IT. And the second problem we found is that many of the software providers, including us, weren't actually even developing software for the underserved market because our software was too expensive and we didn't even call on the community. And Robert personally told me as I was running the businesses, you got to go fix this. You got to go fix this. And whether, business comes after, we fix this, because this is about doing the right thing and addressing this market. And you tell me what it's going to cost us to do this. So I'll tell you a little bit more about that later, but that's when we actually started changing our roadmap, our strategy. And by the way, all the money we made during the PPP program, off the PPP loans, we donated back to the community, Feeding America and other charitable funds, because Robert said we are not going to make money off of this terrible time. And that's what we did. So we started now developing, at that time, developing software that would be cost effective and IT touchless to be able to offer it to the underserved market.
Thank you, Mike. That's really wonderful. So much of that is just speaks to the challenges that CDCUs face with resources, even in regular times for IT. And by the way, I encourage everyone, if you haven't seen Robert Smith's conversation with Kathy Mann, please definitely go check that out. It's available on the conference website now, but don't leave. So by the way, if you do have questions, please do submit them through the chat. But I'll go on with another question. So Hope and Lower East Side Peoples made 141 million and 16 million in PPP loans, respectively. Bob and Aissatou, how have Hope and Lower East Side Peoples, as anchor institutions and CDFIs in the communities you serve, continued along the path that started at PPP loans to continue to serve businesses in your community as they seek to recover? And how has technology enabled your credit unions to continue to make business lending an important and growing part, actually, of your loan portfolio? And, I know in conversations with Aissatou that there's just so much that you offer to businesses. So would love to hear more about how that's continuing. So Bob, we'll go to you first.
All right, thanks for that. So yeah, so Hope, we participated in the first round of PPP, and we did it. We weren't sure, like, hey, how big is this going to get? How many could we do? So we did it all manually. And in the span of a week or two, we did. We manually were able to yell at SBA enough that we could get. I think it was about 30 million in loans in. Lots of larger loans. We had a few, multi-million from some of our existing borrowers that we had. And by the time that round closed, because, it was all the big banks that had all the technology. They, get everybody computer and server to server communications and just shoved through. We sat back and said, hey, we still have a backlog of loans that people are requesting. How do we fix this? So we reached out to some of our existing partners. Mike, I think we honestly might have been one of those 500 clients that went, it's nice, but so we started calling vendors and saying, hey, who can get us up in 24 hours or 48 hours or less? It needs to be all online, needs to be reasonably priced, and how can we do it? So in the next rounds, we actually diverted about half of our staff to work on PPP lending. I was clocking 20 hours plus a week just supporting PPP lending. How can we get systems going? How can we get configurations? How can we do integrations with what the online application that we're launching and our backend systems? We were actually having daily meetings to talk about, here's a problem, how do we fix it? And it wasn't, here's a problem, let's fix it in several months. It was, you need to fix it today. Probably similar calls that Mike was having was members of his team of how you don't get 3 months to talk through. It's like, fix it. We're having a meeting tomorrow. We need an update. So yeah, we ended up doing 141 million in loans. We took 13,470 applications. And we closed 5,251. I've got the notes over here. Hope traditionally had done between 20, somewhere in the 20 to 50 business loans a year prior to PPP lending. When this last round stopped, we all sat back and said, hi, we just did 5,000 loans in a year and a half. We just answered the question, can technology help us grow? So we are, as we move forward, we're looking at, technology-based solutions, taking a hard look. It's kind of a cliche, but we had consultants come in earlier this year, and we've kind of overhauled all of our processes. What are you doing today? We started with, let's look at current state, let's look at future state, and let's weave technology into all of those processes so that we are not doing loans. As people have said before, we're not doing loans from 8 to 5. We're doing loans as the member, as the borrower has time, as they have the ability to do stuff. My joke to the staff is I want a borrower to be able to apply for a loan at 9 o'clock at night on a Friday. And in a perfect sense, we show up Monday morning and everything's there ready for us to finish the closing. If we can make it hands off from our perspective, let's do it.
That's really wonderful, Bob. And I know, Hope serves a very challenged part of our country in the Southeast. So the more help you can give and the more efficiently you can give it, all the better. Aissatou.
Thank you, Peter. PPP was an adventure for us. This year, 2020 was kind of okay. We didn't make many of them due to a lot of reasons. First, we limit ourselves because we didn't know what we were getting ourselves into. That was one of the main, and we didn't have the capacity also to kind of face the demand. Now, 2020, we decided to run the marathon in a way. We made 6 million in loan and 484 loans. This doesn't look like, a lot, especially when taking Bob's case, but in our case, the biggest loan we ever made in amount, it was in 2014, it was 9 million. We never in our history make more than 9 million in loans. And when it comes to the number, the number of loans that we made before this year was 572 in 2008, again, during a crisis. But all I'm trying to bring in here, it's something out of the ordinary for us. We as of last month, we made 805 loans. This is in combination of businesses and personal loan, of course. And we made 20 million. Then we exceeded everything this year. Now, what we are planning to do, there was a lot of work involved. Don't get me wrong. We have only one SBA lender, which is Alfonsina, and she was working sometime overnight from home. It was really a nightmare. We turned every single staff, we told every staff, everybody gotta be a lender. Then everybody was kind of lender in certain way, just to kind of assist to make this loan. Now, after we are done with PPP, we are still lending, and we do realize that we have problem, and our main problem is technology. Our core system, you need to do better, or we need to find a new one, is a must. We have no way around it. All our loan application, we were glad that we were doing the application online, but it doesn't integrate with the system. Then you still have to take them and enter them physically in the system. Same thing with opening account. Then we need to work hard on kind of finding out a new system that's going to work for us, a new core system. And we need to put in place an instant decisioning model where people will go in. We will have a data in place, a guideline where people can be automatically approved. And this time when it comes to new account, we open a 1,253 account. We never done it also in the year. This was just the first for us. Now we have a lot of work to do. We bring in over 300 new businesses because some of the PPP were existing members, 1,000, close to 1,000 personal account. Then we really need to have the system in place. Then we're thinking about a better working core system. We're thinking about instant decisioning. We're thinking about having a system in place to integrate the online account opening to the core system, so we don't have to go 2 steps to open account. And kind of redesign our HELAC because we have not been doing that. And also have a system in place because some of the lending that we do that make us kind of different is the IT lending that we do. And many of our members, these new businesses that got the PPP, they are IT holders. Then if we can have the system in a way kind of identify those and just push the IT lending to these people, that would be great. Then the goal is to maintain these members because the hardest thing really in any institution is to bring in people at the door. Once they're in the door, if you don't provide, they will leave. Then this is a fight. Then within the technology. Yeah, thank you.
Aissatou, I'm going to follow up with you. I'm going to go off script, but You do a lot of work with the businesses that come to you for loans. You're working with them on budgeting. You're working with them on a P&L. You're working with them on the fundamentals. I'm really interested to know, because I think a lot of folks on here can relate, of how technology can help you keep doing that work without it being so resource intensive.
Yeah, I will say that's what we need to find out. We need to find out what is out there and what can we like use to kind of not use a lot of manual process. Like for example, right now, even if we do business loan, the system is not able to track those loans under the business tax ID number. We must put in the owner social security number. That's really not a good thing, because we are like making business loan, but they don't have no credit under the credit history under their business. Then we really need to find out what is out there and sit down, of course, with whomever is available and try to see how can we provide, better services and just alleviate the work on staff.
That's great. Thank you. Thank you, Bob and Aissatou. Mike, I'm interested to dive deeper into how the pandemic changed Finastra. In what significant ways has this experience changed the way Finastra thinks about developing and offering and even designing technology for credit unions, especially CDFIs and MDIs, that will allow them to efficiently expand their lending deeply into communities to reach more individuals and businesses that most other mainstream financial institutions just won't lend to?
It's a great question. Look, as I mentioned, we learned a lot during the pandemic, and digitization really got accelerated. Couple of things. One is we actually adopted the motto that we will do well in business so we could do good in our communities. I think that was a cultural mindset that was a shift for us. Now, part of it is, since I lead the businesses and I lead strategy, and I come from an underserved market, I have two brothers that have a business in an underserved market that could not get a PPP loan, by the way, because they were with a big bank that ignored them. And so it hit home for a lot of us. So when Robert asked, what are we going to do differently? After all the conversations with so many of the CDFIs and credit unions, and Peter, we reached out to you, to Inclusiv, and we spent a lot of time with you, and you really shed a lot of light on how your members felt. We came to the conclusion that our roadmap had to develop software that is cost effective and that is IT touchless. Robert connected with the CEO chairman of Microsoft, Satya. Satya appointed someone to work with me, and they came to the table. Microsoft came to the table and said, what do you need help with? And I said, and I know Bob will appreciate this from the IT perspective, I said, I got to move this to the cloud. I have to move all of our software to the cloud. It's expensive, it's time consuming, but this is the only way we're going to be able to serve the markets that need it the most. And we have to do it at a cost-effective way. So literally between Finastra or Vista and Microsoft, we foot the bill to take all of our software and virtualize it so that it can run virtually on Azure, Microsoft's Azure, and operate through a browser. So you no longer needed a Windows 10 operating system, and you needed a high-end server and all the things inside the institution. You needed IT people to know how to run it and maintain it. Now you can run it virtually. So that was the first thing that we did. The second thing that we did was we realized that, when you're developing software, a lot of times the cost of the software is because you've bundled a lot of third-party applications and the royalties you pay, and that sort of determines the cost structure. So we came up with simple packages, and now we have 3 simple packages for this community. that start with essentially just lending software, automate the lending process. Then you can sort of build on from there with online services and mobile apps and then service the loan. So we've developed 3 packages to address the underserved markets and, CDFIs and institutions with a much, smaller volume need. And it's all virtual. And this is now, we've changed our thinking, and we truly now see this segment and this market as a part of our addressable market. And we brought the cost structure down to where we believe it's affordable. And we've changed our business model so that we can actually deliver it without the normal margins and all of that, because it's in the spirit of let's do well in business so we could do good in society. And we've changed our thinking that way. So now we have products that I think will facilitate loan volumes of say 10 per month, and then you can build from there as the business grows. We've also worked with a lot of other institutions, profit and nonprofit, to look for funding to be able to provide some of the CDFIs with really very low cost that is subsidized by some of the funding we're getting from other institutions. So it's really changed how we develop. It's changed our roadmap. It's changed our customer base and segments that we pay attention to, and truly the culture, which, if there's anything good that came out of the pandemic, it's that it changed our business philosophy and where we invest and how we invest and addressing the needs of our communities.
That's fantastic. Thank you very much, Mike. So, we've seen a lot of changes out of Finastra, and we definitely hope that permeates throughout the FinTech world, because, I think the changes that you've made with culture alone will be very, very interesting to see how they develop and how they change the company in the future. Aissatou and Bob, I'm going to throw one back to you. And we alluded to this earlier in the session with our poll question, and we know many of you are looking at adding new lending technology. But I'd love to hear from Aissatou and Bob about your plans to add new technology that, again, will improve your ability to lend money as efficiently as possible, especially to folks, to individuals, to businesses that other mainstream financial institutions, again, just are not lending to. Aissatou, I will go to you first.
Yeah, as I mentioned earlier, first thing we need right now that is really pressing is a core system in place, just not only for businesses, but for all our membership. And we need to have a business platform just so for the businesses, and be able to any loan we make to these businesses, have a system in place to be able to report these businesses to the credit bureau, because it will help them out. And we are also working on instant decisioning, to have that one in place also. And that's for the consumer loan mostly. And we are also working on having a mortgage application, online mortgage application, which we don't have right now. And we're working also on the new HELAC platform to just be able to have HELAC, because we have not been successful. Then those are the few that I can think of right now that we are working on. But core is the main. Either to have our core do what we need or get a new core, I don't know, but core system is a big deal for us, for tech.
I love how you say those are the few you're thinking of. That's a lot. And I think you'll have your hands full for a while, but I think those will lead to some amazing changes. Bob, I'll throw it to you.
Sure. I mean, we're very similar to Aissatou in that we're looking at everything. You know, as I alluded to earlier, we had consultants. We spent the first quarter of this year literally answering the question from our CEO that said, if we double in size in the next 5 to 7 years, are our existing systems and processes sufficient to handle that? And he repeated that several times to make sure that it sunk into everybody of we are looking to double the size of Hope in the next 5 to 7 years. And so is everything we have, and he said everything, I mean, across the board. We walked through every department, commercial lending, mortgage, retail, deposit operations, back office, even IT. Are the systems we have in place, are they sufficient? And the answer was yes for some, and the answer was no for a good bit. So we actually have a 5-year roadmap right now that we are going to start walking through and looking at taking a hard look at every single system and asking the question of what's better, what's out there. And at the top of the pyramid or middle of the circle, however you look at it, we're putting the member experience first. Is this improving the member experience? Is the question that I've asked my team and other teams that we're looking at new technologies right now. And we're classifying member as an employee, a member as a borrower, or a member of the credit union. It's anybody that's consuming the system or the solution that we're putting out there. Our big scary goal right now is, can we get every system we have to talk to every other system? Instead of, and it's a very simple question, and it's one that my team all goes, what? Because we know that we have good processes today to service our members. We know that our employees talk to each other. Someone comes in as a commercial borrower and we hand them off to retail. We are looking to say that is a good handoff, and we're not going to do that from a system to a system perspective. The legacy model that Mike's talked about, we get software, we deploy it in-house and it runs. That's great. But as we heard yesterday in some of the talks, consuming stuff needs to be faster. We need to react to, our members' needs faster. So my top of line question for new vendors now is, do you have an API? Do you allow for integrations and access to all the data so that I can consume what I need from you via the API and get it to talk to my other systems via APIs? If I have to have a employee enter the same data into 2 systems, that's a bad process, and we're going to take it out and we're going to replace it. And that's where we are. So, I mean, we look at it and say how Hope is structured today, how we're set up from a technology perspective is completely different than we're going to be in 5 years. And the goal is all about increasing the member experience.
That's wonderful. And again, keeping that member experience top of mind is something that we all should be doing. I have one final question, and then we'll actually get to some audience questions. So, by the way, for those in the audience, please do, if you have a question, put it into the chat and we will get to a few of them. But my final question for all of you is related to a comment that came out of a session yesterday, where we were reminded that design, the user interface, it really is a really critical element that fintechs need to keep in mind, but perhaps don't always do when developing solutions for LMI users. So what advice would you give to fintechs that are designing or offering consumer-facing lending technology for community development credit unions and their members? And Mike, I know you might be aiding the enemy on this one, but really would love your thoughts. And I'm going to go to you first.
Perfect. Look, it's a great question. We learned a lot through this pandemic, and all of our lives changed, and there's a new norm and all the buzzwords, right? But the thing that has really changed for me as a strategist and a business owner of technology, and I've been in technology all my career, what's happened is digitization has been fast forwarded. And where prior to the pandemic, when I talked to a customer about everything being digital and remote and their data on the cloud, there was always a bit of a, an impedance and a pushback that, yeah, it's going to take time. All that conversation has changed completely. And now what we know is that the consumer wants everything remotely. I have 2 children who I'm not sure when the last time they literally walked into a brick and mortar institution. That's just a generation. They're expecting everything remote. They're expecting everything virtual. They're expecting everything to be easy. And if it's too many clicks, they're frustrated. So, we're learning from our own, communities, as well as what I'm hearing from the, within the North American community markets. I have nearly 4,000 customers. And so we're hearing all this. So what we did in response to that, we actually hired a user group head, and we built a team that now oversees all product design for usability. Everybody used to talk about usability. We had resources, but you ended up having a lot of engineers determine functionality. And I think those days are behind us. Design today is just as important upfront, and what the customer and consumer sees and how relevant it is to them and how quickly they can navigate through pages it's more important than the functionality sometimes, because a lot of them actually drop off in the middle of an operation because they're frustrated. So it's changed us as a FinTech by investing in the upfront process and the design and the architecture and usability and all the research that we're doing and all the user group investment to make sure that what we ultimately deliver to the market is something that the consumer really appreciates and finds easy to use. So it's something that I think every FinTech and every and then every technology company in every industry needs to step back and ask themselves, are we actually making it easy for the user and making it easy to operate remotely?
That's really great to hear. And I look forward to seeing the results of that. Bob and Aissatou. So again, what advice would you have for those FinTechs out there who are developing lending technology for credit unions like yours? Aissatou, I will go to you first.
I will say going digital is the best way to go. I'm not in a good place of saying it because we are limited of what we have. But just like Mike mentioned, I have grown children. All they keep on asking me is where you're going to have a digital wallet. Those are like something minimal that I think most of the financial institutions have right now. And as we're talking, I'm in the process of implementing it. Some of the digital, they're easy to install, to implement, but some of them are impossible. Like in our situation, I will say if anyone has a way or the capacity to go digital, just go for it. It's the way to go. Sometimes you will have all the members. In our case, even if you have the most sophisticated digital, they will never stop coming to the branch. Then that's going to be the case. But I will say if you can and your membership allow you to go fully digital, just go for it. It's the best way.
That's great. And finally, Bob.
Yeah, I agree. Digital first and mobile first. We've heard over the last decade or so that the largest growth market for mobile technologies is the 18 to 34-year-olds. I think in the last 18 months, for me personally, the largest growth that I've heard is from those that are 65 and up. My mother has every restaurant and every grocery store app on her phone and can use them and taught me how to use a restaurant app. When I saw her a few months ago, I was like, oh, I want to go get something. I'll have to call them. She's like, no. They have a mobile app. And I was like, I didn't realize that restaurant had a mobile app. So I would say, yeah, digital first, mobile first. Because for me, it is far easier to take a digital process and convert it into an in-person process. So if we start digital and start mobile, I can make that happen in the branch very easily. Whereas the other way around, it's a lot harder to take a manual paper process and convert it into digital. I mean, we've actually had conversations here about, do we contract with psychologists to actually review our stuff before we deploy to say, it's 7 clicks, can we make it 5? This button is green, doesn't need to be blue. Actually looking at, because it talked about the cognitive dissonance was talked about yesterday. Looking at how it visually is set up can ease the user through the process. Or as Mike said, they're going to make it halfway and their frustration is going to go, too many clicks, too many steps, I'm done, I'm out. And we'll go find somebody that can do it faster.
That was great, Bob. And by the way, I know I will be calling your mother with any IT issues that I may have. So there's some great questions from the audience. Mike, I'm going to throw one quick one to you. Can you just define what you mean by IT touchless?
Yeah, sure. The way we defined it with Microsoft as our partner to address the needs of our communities here, is that you do not need IT expertise and IT knowledge to be able to operate the application. And what is IT touchless and frictionless is that the ability to actually use the application just by launching the application on a device. So you launch the application on your phone, you launch it on your tablet, you launch it in the browser, and you do not have to worry about downloading the executable, launching the executable, configuring it, all of that. You don't have to worry about where the data resides. You don't have to worry about whether it's secure. You don't have to worry. So it is IT touchless from the perspective of, as a operator of the application, the institution can actually provide their user the application without having IT support in the institution, because you would subscribe to the provider who is hosting the application, maintaining the application, upgrading the application, all for you. And it's a sort of a subscription model that allows you to offer something to your clients without you having to have it on-prem and supported on-prem. And I hope that's clear from how we defined it.
No, that was great. Thank you, Mike. Another question, and this is probably much better for Bob and Aissatou. And Aissatou, you talked about this a bit, so I'm going to throw it to Bob. How did Hope assist small businesses that perhaps did not have a CPA that prepared their financial statements, may not have had a business plan or projections? Did you create some technology solution for them? Because obviously these are very labor intensive things that credit unions do. Perhaps they can be met with technology.
So we ended up with kind of a 3-prong approach for that. We partnered with our outside outsourced accounting firm to provide resources for members that needed it. We also partnered with local partners or local TA partners, on the ground in the local area that do that sort of stuff. And then thirdly, as I said, we diverted half of our staff to work on PPP. So we actually had staff that were training people and teaching them and talking them through, hey, here's what you need, not doing it for them, but here's what you need to do to get your tax returns. Here's who you need to call. I mean, it is, we did 98% of our loans at under 150,000. So a lot of them were sole proprietors who never knew, well, how do I find my tax return? Who do I call at the IRS? I mean, it was a very manual process for us. And we have continued some of those relationships. You know, we grew from 456 business accounts to 3,000 at the end of last year, because a lot of people, kind of like Mike's brother, who got turned down because he was at a big bank. You know, we tried to wire money to him, and the big bank turned them away because they didn't have an account. And we said, "Hey, give us 20 minutes. We can have you set up here." They took it.
That's really great. And Aissatou, I don't know if you have more to add on that.
So we do the same. We refer them to a partner group or to accountant, but we don't do it internally.
That's great. Well, perhaps there's a FinTech out there that is listening or will watch the video and have at it. I know we're just about nearing the end, and I want to absolutely thank our speakers, Aissatou Berry-Fall, Bob Carlson, and Mike Salfity. Thank you very much for sharing your insights, your experience. This has been an incredibly challenging 18 months, and we just really appreciate learning from you today. Folks, do stay tuned. There are sessions coming up after our lunch break, and we do hope that you can rejoin and watch along with us. Thank you very much for your time.